Hello everyone. Today we are going to discuss another panel stock named Ashi Industry Limited. If we look at the pricing of the company, the pricing of company is around 27 rupees 90 paise. If we look at the brief introduction about the company, the company is in the business of mining and processing of natural stones. So it is a market leader because it is the largest stone mining company in the world, and having the largest stone mining quarry in the world. Mining quarry means generally in mining, where we extract coal, irons, or some valuable precious metals or materials. So in that case, the we go dig deeper into that and we extract from the core of the earth, or we can say a mining area, to extract the natural minerals. But in this case, in mining quarry, generally a quarry is something where you are extracting the rocks or the materials that are used in infrastructure business, and that is on the surface area only. We do not have to do mining like what we do in coal mining or the gold or any other precious metals mining. So this is difference between mining and quarry. Also, the company is operating in the business of wind power and trade in steel coils as well. So the product profile is around like Kota stone, sandstone, which contributes around 92% of their company's revenue. And company has also overseas subsidiary which the company has disposed of, and the company has decided to liquidate that company and cease to carry the business as well. If we look at the company, the company has earlier wind power units in Maharashtra, but because of the change in the wind pattern, they has diluted or disposed of that unit as well, along with the lands which is situated there. If we look at other factors, the market cap of company is around 251 crores. So the company is a nano cap company. Uh, if we look at the other factors, the PE of stock is around 10 times. It means that the PE of the stock is half of than what it was of median company and the PE. So company which is a market leader and company which is having an hegemony is having PE less than what the industry PE is. So it shows a great potential in this company, because uh, company if a company is a market leader or in monopoly situation, so the company pricing should be more than their peers, because company derive the hegemony, and company is the price maker and not the price taker. So company does not set the price according to the market trend, but the company set the price as their wish, and according to the profitability margins as well. So in this situation, the company will leverage that as well, and and stock P is approximately half what it was if we look at the peer companies. And the book value is something which we have to look into, that the book value of the company is around 38.35.80 paise, which means that this company is a highly undervalued company, where the book value is more than 25% or 30% more than their company's current market price. Looking to the ROC, the ROC is around more than 10%, and the RO is around 8%. Also, the company is a dividend paying stock. The company fits in every parameter. Company is in small cap or nano cap company. So the company is a penny stock, first thing. Then the pricing is around 28 rupees. PE is less, so company is undervalued. Book value is more than their pricing. The company is also dividend paying stock, and the promoter is holding around 75 3 to 4% in the company. So the company fits in every parameter if we look into. However, if we have to see the sales pattern, so the sales of quarterly grows to 46 crores. So the company is is getting a decent sales, and the sales growth are not much, and that would be because of the fluctuation in the in infra business, in particular India, because the major income of the company is being derived from the infra business or the construction activities, or the real estate business. So the more they demand, the more the income of the company will increase. And in last few years, the real estate sector or the infrastructure has not been seen that much boom what it was to be. So that is the reason why the company's sales are not in good trajectory, if we say, because the companies have clocked its highest sale of 239 crores in March 2018. Now it is around 145 crore. So the sales has not shown an improvement inside. In fact, they have seen a dip. So that is the reason why the pricing of the stock has seen seen undervalued position and the company is very undervalued, the pricing of the company should be more than 50 rupees, but it is less than 30 rupees, and because of this concern where which the investors are looking into. But since the company is a market leader and the pricing of the company is such, uh, pricing of company and the positioning of the company is such that they will, as soon as the real estate market or the infra market that the government of India and private sector are boosting to increase the real estate, and how we have seen the growing demand of real estate and the infra business. So obviously the sales of the company will derive, because they are interdependent and they are dependent on the infra business particular, be it construction activity, be it real estate business or any activity. So the company is totally dependent on them, and as their demand grows, the company's demand pick up, and if they are in recession phase, so the company is also feeling a heat of that. So if we look at the operating profit margin, so the operating profit margin are varying from year to year, but currently they are within a range of 14 to 18%, and that is a decent operating profit margin. Looking to the EPS, so the EPS is around 2.79 per share, which is a good. That is the reason why the company is 10 times. So the, if you pay 27.9 rupees, you get 2.79. It means for every 1 rupees you have to pay, for earning every 1 rupee you have to pay 10 rupees, and that is how the PE is calculated. So the if the company's price is 27.9 and EPS is 2.79, so 27.9 is divided by 2.79, and you get an PE of 10 times. It means for earning every 1 rupee you have to spend 10. If PE is 30, so the if for earning every 1 rupee you have to spend 30. So how whichever times the PE shows, it shows that that many money is required to earn a single rupee in this particular company. So if a company is having PE of 50, so it means you have to you are earning 1 rupee by paying 50 rupees. So that is something which we have to understand as well. So looking to the sales number, so the sales growth has not seen a good improvement, but the profitability are showing a good improvement. From if we look at the 10 years data, so the 10 years data show sales growth of 1%, but the profit is 10%, which shows the efficiency of the company. Of 5 years data, it has been negative of 4%, but the profitability shown 6% upside. Also in 3 years data, the same case. In 12 months data also, it is the same case. And pricing of the company is also decent enough, and the company has shown a growth of 20% on CAGR basis in 10 years time, and 5 years time 10%, and 1 year time the company has stock price and so to the double, and it was trailing around 14-15 rupees, but now it is around 27 rupees. So also the stock has shown a momentum even in this slog, or we can say downfall in the sales. The stock has never seen something significant reduction in their pricing or the valuation, and that is something which I think that everyone understand, because the company is correlated with construction business, and the mining stones are being used in the interior and exterior designing of the housing and the other factors that are used in the constructions as well. So that is easily correlated, that the more their demands grows, the more the company have to procure or the company have to extract, and so the business is totally correlated, and the fluctuations is easily evitable. But we have to look at what companies is doing according to that. So if we look at the corporate action, so the company has done an amalgamation in June 20 from DJ Mining and Export Private Limited, shares held by. So if we look at other factors, so companies consistently rewarding their I would say investors, either by giving them bonus shares or giving them stock split. So in 2010 company has given stock split, then again company has given stock split in 15, then after that company has given a bonus issue of 1:4. It means it shows the company, the management of a company which wants to retain or attract their investors to be in their company invested or come and invest in their company. If we look at the dividend pattern, so the company is consistently paying dividend, and one of the important thing is company has not paid dividend because of COVID effect, because in September 2019 the company has paid out dividend, but because of delay or halt in the construction activity, company has halted, or a company does not pay any dividend in last 4 years because of the COVID era, as we all have know, or the effect of decline in the sales as well. And that brings to the integrity of the company, that company don't want to swallow their swallow their reserves uh, or anything by giving it to the retail investors or the investors. And particularly the major investors are in this company. If you look at to, so the major investors are promoter, and the promoters or the substantial shareholders are holding around 80% of the shares in the company. So even if this is a way through which promoter takes intake from the company, and it seems to be that, oh, the company is giving dividend to you, but the 80% or the 70% is being taken by the promoter only, so it will not give much impact to you. But still the company has not given any dividend to themselves, so the promoter has not given any dividend to themselves as well, because even if they give dividend, so it seems to be that the profit has, the reserves has seen a dip, and because of the uncertainty after COVID, so the company is susceptible whether the company can retain themselves in long run, because we are not expected that how long the COVID effect will go on. So the company has taken a good decision, and by not paying dividend. And after March 20, after 2019, the company has paid their dividend in 2033 again, which shows a good sign, and the dividend is around 20 paise per share. If we look at the merger number, so the merger is obviously there is nothing as such which we have to discuss. The face value is around 1 rupee. So the company is having around 1 crores of 9 crores of equity share capital, and the company has not shown a dilution in their equity share capital as well. So if we look at, even though there is 7 crore, then 8 crore, then 9 crore, so dilution is not that much. And the company has given bonus issue or a stock split. So stock split and bonus issue cannot be considered as dilution, because the same number of shares or the equivalent number of shares will be allotted to the existing shareholders. So that is something which is not considered as dilution. And it shows that the company wants to retain or attract their investors, and company is genuinely having their sufficient working capital or reserves, and so that they do not require any right issue, or they do not require any FPO or something to finance themselves. If we look at the, as we all have seen, each share is having around 35 to 36 crore rupees of book value. It means 9 crore shares with 36 crore of book values comprises to around 321 crore rupees or 322 crore rupees, which is net worth of the company. So the company which is having a market cap of around three, I would say, if we look into, so the market cap of the company is around 251 crores, but the net worth of the company is, I would say, more than 300 crores, and it is stood at around 322 crores. So it shows that the how sound the company is in terms of their financial statements, and the fundamentally. If we look at the borrowing, so the company borrowings has reached 230 crores, and after that the company has consistently reducing their debt payments. And before COVID, the company has peaked its, I would say, company before, during COVID or COVID effect, the company has peaked their long-term borrowings of 115 crores, but company has reduced it to uh, a a notional amount or a minimal amount of 3 crores only, which is not considered as a loan or something. Or we can say the company is a debt free in this situation, because the company is having around sufficient ample amount of reserves and surplus. If we look into long term borrowings, so the long term borrowings are not sufficient or much enough, to which we are having a concern about. If we look at the short term borrowings, so the short term borrowings are around 133 crore, and reduced to more than 75% at 25.75 crores. So both of the borrowings are being reduced, and that is something which is a good indication from the company's side. So trade payables of the company is at minimal situation, because mostly the company is in the business of extraction. So the company does not have any trade payables as such, and because they have their own machinery to extraction or doing mining of quarry and stones, and the company is a generator of raw material itself. So the company does not require any trade payables as such, and that is why the trade payables has not seen much in numbers for the company side. Because the company is the first in the supply chain range of company is the first, I would say, company in that supply chain flow, or the I would say flow of operations. From company is the generator of that business, and then that raw material is being used by a manufacturing company or the construction company, then that property is being sold to the customers. So the customers are third in the supply chain, manufacturers are second in the or the infrastructure are second in the supply chain, and the company is the first in the supply chain. So the company, if the company is first in the supply chain, so the company mere have or very less chances that they are having any trade payables as such, because they mostly do it with the help of their own machinery or hired machinery and with their manpower or I would say labor. If you look at the fixed asset, so obviously the company is having a fixed asset with the huge chunk is being attributed to the land and building portion of 155 crore rupees, and that is something which shows that the company is sound enough and company have immovable property so that the company can easily so that is not a concern, and I think that the kind of sound profile they are having, so we do not have to look into that. Land and buildings are something which is which a company have to use it for their any adverse in any adverse case. If we look at the cash equivalent, so the company is having a consistent cash flow of around 4.5 crores to 5 crores on an average basis, which shows that the company can easily pay off their debt. In fact, they can pay off their long-term debt of 4 crores with their cash in hand only. That is something which is a good factor. And since the company see the cooperating activity, so in most of the case, the operating activity shows a surplus or the I would say positive sign, or the positive numbers. Why the positive numbers? Because company isn't a market leader, and so company is not a price taker. Company is a price maker, and company have probably less lag time, or company receives a company often receives advance or something before making an order or delivering an order, and the payment time of the company is also very less if we compare it with the let's say the company is having data days of around 119 days. It means the company payment cycle is less than 4 months, and receivable cycle is less than 4, I would say, months. And because the company has less days payable or inventory days, so that would not be given here, because that is not something which is substantial in numbers. If we look at the profit from operations, so the profit from operations stood at 27 crore rupees. Receivables, the company has collected more receivables than the company has generated it. So receivables are given a surplus of 15 crores in cash form. Same with the inventory, and the same with the payables as well. That is how the cash from operations has been increased to 34 crore rupees in this particular financial year. So the company has invested something, and that we have to look into that. The company has purchased an investment of around 50 crore rupees, and also company has sold some of them, and that is the reason why the investment sold is around 14 crores. Interest, company has an interest payment receipts of around 13 crores, and other financing activity and the fixed assets as being purchased. So that is how the 32 crores of negative cash from of investing activity. And that is a good sign, because it shows that the company is focusing on capital capex, and the company is not only having their existing inventory and machinery through which they are operating, they are consistently upgrading their machinery for the betterment and the efficiency of the company and workforce as well. uh, if we look at the proceeds from borrowing, so the company has raised some borrowings of 43 crores. We have to look into that. What are those borrowings? And then accordingly, we will discuss how to deal into. If we look at the borrowings, so I think that the borrowings are something which is not clearly visible here, because the company has no long-term borrowings, and the short-term borrowings has also seen a dip, and there is not nowhere I think that which shows that the company has taken this amount of borrowings. So we have to look into you have to look detail into that, why the company has shown proceeds from borrowings of 43.59 crore, because that is something which we have to look into, because company has and I think that that would be short term borrowings, and a company has taken for a mere period of 2 or 3 months, and then substantially the company has paid that the some uh, substance subsequently, and that is reason why it has received 43 crores and then paid the same amount as well. So that is not something, that is a short term period loans which company has taken and pay off, so that will not be an issue, and that is why that is the same amount is not shown in borrowing section. So this is not a concern. Company has paid off interest of 2.25 crores, and company is having a cash flow of 4.5 crores. So company is having two times of what they have interest payments and the liabilities. And that is something which I think the company is very good into and decent profile. And it shows the company is very deleveraged company or less leveraged company in terms of borrowings and everything, and company is solely financed with their reserves, and the companies having sound reserves, and the less no dilution in the stocks or the share numbers in last 10 years of historical records. So that is something which we treasure a lot, or we appreciate in a company. So the interest paid finance is around 2.2. Other company has also paid dividends of 1.8 crore rupees, and that is shown here. So that will not be a concern. That is okay for our company. The only concern we should look into that what are the proceeds from borrowing and repayment of borrowing and interest payment, and accordingly we also looked at what are the cash from operating activity, so that we can find out that whether their cash from operating activity as financing are sufficient enough to pay off their borrowings along with their financial interest or not. If you look at the promoters holding, so the promoters has not sold any single penny of the company in last I would say 5 years of record. The record historical records are available for last 4 or 5 years only in this case. So that is the reason why we have to look into only these periods, and the company has not sold any promoters have not sold any stake, even though the public shareholders that are holding substantially in the company, they have not even diluted their penny share, and even they have increased their shares. Like Mitha Deepak Shah has increased from 1.18 to 111 to 18, and this is how around 80% of the shares are being held in the substantial shareholders or key investors, and only 20% is held by public shareholders. Also, if we look at the number of shareholders, see the company has not diluted their shares, and that is clearly visible in the number of shareholders. If the dilution of the share is much, like if a company, let's say, given now if a company wants this share to be lucrative, then in sooner or later, if the let's say company has given bonus of 2:1, now if the company has given bonus of 2:1, so the every shareholders would have who is having one share, they will get three share, and in that case the number of shareholders will increase drastically, and the number from and very if a company is a market leader and having a 250 crores of market cap. I have seen many companies having 200 crores of market cap, and they are having shareholders more than a lakh, and in this case the shareholders are around 11,500 only. So that is something which I think number of shareholders are going to increase in sooner or later period. And this is how I conclude the video. I think that the in major I have discussed everything. The only concern in the company is their sales numbers, and we have to look into with the financial statements of next quarter, that whether the sales numbers are continue to grow, and we have to look quarter and quarter basis, so as to understand that yeah, the company is showing prospects or not, and then only we think that that is this is the stock which is something to look into and focus into. So keep this stock in as a study for a study, and track the stock and track the financial statements of this stock for June quarter and then September quarter, so as to understand whether the sales numbers have been increased, and what are the next improvements or the major improvements or development that a company is doing, and accordingly that you decide that whether this stock is good for you or not. So I think that this is from my side, and the purpose of video is solely for educational, and I'm giving this I'm providing this so as to increase the financial literacy. I'm not providing any financial portfolio or portfolio management services related to purchase or sale of stock markets, or not any opinion particularly to buy or sell any shares in any company. Uh, I think that ask with your financial advisor before investing into stock markets, and this is how I conclude myself. I hope you all enjoy the video. Thanks for watching.